Hey everyone, welcome to Principal Profit Trader, February 19th, 2026. Yes, I've been doing this for 6 years straight, coaching calls, 10 years trading. It's crazy. Here we are, and we're going to take a look at the Bitcoin daily price here. Let's zoom out. Okay, so run a daily here, right? The daily is good for getting a larger time frame context, and we're also going to be doing the daily call to help us with timing for the next day, right? So, but as investors and as we're trying to gauge ahead of what we think is possible, we can look at variations of this. We can look at variations of these different time frames, right? So we have the daily, we can look at the 2 day, the 3 day, the weekly, two weekly, the monthly. What we're trying to ascertain here is a concept called a beauty principle, which was taught to me by a man named Kobe, who works for Midas Touch Consulting, and this is his principle. This is his unique way. We are basically looking for harmonies. I'm not even explaining as well as him. It's sort of an art and a science. He's looking for how price behaves around moving averages, sequences, and previous market behavior influencing different levels and behaving at certain ways that could potentially give. And it's not always straightforward, like, oh, this level went up at this moving average, then it goes up. Like, for example, I saw beauty principle here when this touched here and that touched there, but as an inverse beauty principle, right? I on the way down, it helped me. I saw this went up, then went sideways, this will go down, then sideways. And I drew a corresponding box up prior to even this going down all the way. And it really hit right to that level. That's how crazy. I mean, it's insane that I cloned this box before that leg happened, and I said this is where we will probably get before we get some type of short-term exhaustion, and this is where we went sideways. I'm not saying we're not going to have another leg down, but isn't that crazy? Like, that hits it right on the tee. Let's see if I can get it a little bit better. Look at that, right on the tee. So, and I also cloned that to indicate the sideways channel that we're in. So this is how I'm seeing this beauty principle thing. This is, and you would say, oh, are you seeing this now? No, I drew this before this thing got all the way down there. I draw the box to be the exhaustion level. I mean, that's really nice. There's also other things that I saw. I saw this was a false breakout, a falling wedge, and then basically a clean, bigger picture bounce breakout in the right context where it didn't have this crazy high volume node to break through. Plus, this was a large move. And the trend was still intact at different levels. You can see that the bigger picture bias was still bullish. This time, however, you made the head, right? The triple top, the quick reversal here, right? Then we make another shoulder here, right? This is more like a head and shoulders pattern. We're topping it. Plus, we're 8 leg counts up. You know what I mean? So when we went up here, it's not like, oh my God, I can't wait for this to go back to those highs. I'm selling. I'm thinking we got to that 100K, that, those whole numbers are magical levels. We had, as we popped up here, a hook from extremes. That's a reversal signal, but more than that, right? You see how these made kind of like very horizontal, like they're almost at the same level. That's called a pure balance. And then we had a clean break, right? We didn't have that type of pure balance. We talk about pure trend days. We also have pure sideways days. When I say balance, it's synonymous with sideways. So what you're seeing here is not a clean balance, but a rising channel, rising in agony. We call this pattern not a balanced breakout, but potentially a rising wedge, or another way to say it is a false breakout pattern, right? This was a bigger picture balanced breakout pattern, clean, where bias is up or only going long now. This, when it popped up here, I was already thinking short, but the confirmation is when it pops back into balance. Even here is when we got out. But even if you waited to here, you're only going short now because the larger time frame is bearish because you got a bigger picture false breakout pattern. Bigger picture patterns influence larger time frame biases. Right. So while this was a clean bounce breakout, this was a false breakout rising wedge. This was a falling wedge that's bullish. This was a rising wedge that's bearish. If you come to the channel, even before this broke out all the way down here, I said as this was coming up here into this, that this was most likely a rising wedge. This isn't hindsight bias. Okay. So this is not hindsight bias. This is me applying the system, which isn't like, oh my God, he only looks for patterns. No, bigger picture patterns is just one of a myriad of categories that form a holistic trading system because you need a holistic way of looking at the markets to understand correct market context because each day and every day is unique. Each and every week is unique. So all these patterns may be repeatable, but they're not exactly the same moves. While you might have the same exact move in chess, you're not going to have the same exact way of looking at things because these are only visual representations with infinite possibilities. But overlaid on top of that is repeatable human responses to these patterns and this amorphous piece is known as the market. There are people that are obsessed with trying to find the market riggers, the market makers that are pulling the strings and the ones that are manipulating it. Why would you try to figure that out when it's always inherent in the price? I don't care who's putting up the fake sell wall, if it's fake or not. We can see that this was an area where sellers may get active again, and we're going to have the expectancy that they will again, right? All things being equal. Right. So it's top down, multiple time frame system in order to understand the market context. We come in with a trade plan each and every day so that we can understand how to trade for the intraday day trade swing. Maybe one, maybe two, maybe none all day. That's it. Maybe if you're lucky, one of those 25% runners will lead into a swing trade. But why would you even consider that when we're in a two-sided market now, right? Once the larger time frame bias shifts to down, then you could start holding runners down, right? But I mean, as we're going sideways, there's probably going to be long and short entries every single day, right? Not necessarily every day because we're in a trading range. When we go towards the top of the range, I said this last week that once Bitcoin got to the top of this range, that sellers can get active again because why? We were in a down phase. What's after a down phase? We go sideways. Why? All trends end in balance. They don't just go down again. Now they have to bounce again because that kinetic energy needs potential energy in order to manifest another trend. There's literally just two phases in the markets, trends and balances. That's it, right? And we can figure out we can have an idea of a probability based on the leg count of the trend when we might get a major reversal. And then we can look for the candlestick patterns, Nielsen style, within that context in order to confirm it. But if you're selling on strength, my gut was to sell once this got close to 100K because I know 10, you know, that level 10, that level 100, that level 1,000, those are magical psychological numbers, right? We got to that. Plus, before that, I said this was a rising wedge, not a pure balance breakout pattern. And then it was most likely going to be potentially be a false breakout, right? So it became a breakout. We broke this cleanly, but if you drew this trend line, you knew that we were hitting a rising wedge, which then if we popped back into the balance, if you just draw a horizontal one, right, then you know it's a false breakout pattern. This one obviously wasn't. Plus, we kind of knew this was going to be a false breakout pattern. There was a lot of things like as we were coming up into here, if I draw the I'll show you the visible range volume profile, you'll see, right? Perfect, right? That's an indicator. As we came up into this, we hit a major resistance node. That is a multi-year high volume node, right? Where the red line, the node is this yellow thing, the general area, and then the value point of control, the red line, the horizontal is the VPOC, right? That's the time that buyers and sellers spent the most time in price agreement transacting price. That's a hidden area of support or resistance. And when we popped up into that, with this being a hitting the trend line, showing a rising wedge, which is a bigger picture bearish pattern, which then can be confirmed with the false breakout pattern that goes back into the balance. That's the confirmed it, right? This one was the falling wedge. So see, I have the directional trend line that way. When you have a confluence of both directional and horizontal support, you have a high edge. See how we had directional and then we also had a horizontal zone here, right? So the trend lines help you show direction. I never used to use them for years, and I use them now. It helps me see direction. It helps me with this larger with multiple time frame analysis, which is it's you know I go into that short, intermediate, big picture, and then those form an amalgamation if we have time frame alignment or not between them to form a category called a larger time frame bias, which influences our probability calculation scale. This is all in the system that I've been teaching for years. It's taken me about 10 years to actually execute now with some really good flow state, especially because the short side always used to terrify me back in the day to actually execute on real size and short. So I had to do uh this system, which helped our investors and our day traders. Like for me, with the top-down multiple time frame system, there really is no difference between this, right? Because I'm not looking even as a day trade, I'm not looking for a smaller pattern on a smaller time frame in a vacuum because it hits a moving average, right? Everything is a top-down context. So I'm always, why wouldn't I be helping investors? I'm always zoomed out. We're gonna go farther out than this. Okay. But I just drew this and then the beauty of this replicating, the beauty of this replicating, right? You wouldn't just say, oh, we were around here, then I go here, and then we went up. I mean, that, like I said, anything's possible, but is that probable based on how this market context changed? And you might say, well, you're seeing it now. Of course you knew. No, I bet this ahead of time it went down. I told everyone to get out around that level, and I started shorting from this day onward, and it's all live in the channel. And it's not magic. I'm literally lining up probabilities on a system, right? That I've been putting together that I teach live in front of people on this channel. That if you want, you can put it into your thing or try to do it 100%. It's not easy. Um, Sometimes, like, you might see this but not want to see, like, as we're coming up here, we had this high volume node in the VPOC. When we came up here this time, we didn't have it. We had a clear break from balance. This was like, a few weeks to a few months, right? From here to here, that's like years, right? So when we came back up into it with this is a reversal signal, hook from extremes, right? With the pattern of the rising wedge into it, then the reversal, yeah, it was just the magical number of 100, broken resistance acting as support. The fact that we had one leg down, then this can go up, and then this rising wedge bigger picture pattern, which is sort of like an intermediate time frame pattern here. If this did confirm, as I suspected based on the probabilities, that we would get a another leg down, now we have this thing called, now it morphed into this shoulder here, this head here, and this shoulder here, and that is a head and shoulders pattern. So don't think now because Bitcoin's half off or your favorite crypto's half off is a good time to buy. That's purely DCA, and they're only thinking levels half off, 75 off. They're not thinking of what phase of the market we're in, how long my capital will be tied up. Do I really want to be on the opposite side of the market right now? I mean, if all trends end in balance, wouldn't this have to balance for a while? And if this isn't in a head and shoulders pattern, don't we have another leg down? I mean, that's why I have this zone down here that we can go test it for sure, right? I mean, not for sure. I don't want to speak in any absolutes, but also like once I zoomed out, right now the this high volume node is no longer the biggest. It still sticks out, but this one actually is a little bigger. And notice that's where we started to balance, right? Multiple leg counts down, and then strong leg down count into it. Then you go down here. Short term for us, oversold, hook from extremes, but then coming back up and hitting inverse zero line rejects, showing that like I said, once we came back up here into any susceptible resistance, the former larger time frame bias of this downtrend kicks in because it's a bigger picture pattern of a downtrend from a bounce breakout. Everyone who's underwater going to sell at break even. Those traders up there that don't have diligent stops. I mean, I'm shorting up there just because I know that. So I've only been going short since my larger time frame bias shift from neutral to bearish once this false breakout pattern hit up here on the not right on strength, but on like around 95, like 2 days later. I think it was the sixth, so of January. Now I had to be, counterintuitively ready to go, like exiting everything in the portfolio, not having hopium, knowing that I can make money on multiple ways. Sidelining is one of the best ways. So a large position of a portfolio with sideline and a position system. Then we initiate our income producing trades on the short side to take advantage of the next phase of this market, which were successes. And like I said, I know zooming out, this might seem like, oh, this is so easy. Why didn't you just do this every single year? I'm telling you, emotionally, when you have size on, for some reason, for me, psychologically, it was very hard to put on shorts. Even when I would say things to myself like, well, that markets fall faster than they rise because fear is stronger than greed. So, and it just, that was it's no longer an issue. I actually prefer it now because it works out quicker. Um, so that's kind of what we're dealing with here. So let's see. Let's go out to I'm just going to go out on a smaller time frame. The short that I gave live for everyone yesterday was a double top. I forget what time. Maybe it was at 10 a.m., right? I said Bitcoin's making a wide intraday double top. Everyone knows that that is a fade setup, especially if they've been following my zones. If that happens at initial resistance, so that was a short there, half off around the lows of the day. Then I think I went around here 25% off. Like I said, I was hoping for a breakdown. I was hoping for a triangle breakdown. The intraday bias was down. There was some momentum on our side then, but the relative volume was so low. So it was most likely at that, not going to be like another downtrend day, double distribution or a pure down, downtrend day where you have lower lows, lower highs because the relative volume is so low. You want to have a very strong volume. So there was nothing I could really do. What I did do is I said, okay, well, I don't feel comfortable going long because I'm bearish right now, even though this was good support, this low here, and it was towards the end of the day. So I kept a runner in, right? Even though my instinct was to get out and then just go long here and then ride this up here. But I said, okay, I'm more towards the end of the day. As the runner came back down here, I think it made a double bottom. I exited the runner. And it was a decent move because now it's came back up to the high of the day. Even though this is my size, like technically right now, if I wasn't teaching, this is sort of a similar setup to yesterday where we've come back up and hit this high. Now, I don't think it looks good, right? It's testing. See how this is a key reference area? This is today's high, right? But it's in confluence with some other things in the pants, which I've drawn, like this move up here and whatnot. But remember, the short-term bias, like I have down, is definitely bearish. We've been in this short to intermediate term downtrend of this channel. So also zooming out, forget the short-term bias and the intermediate and the big picture. If we just zoom out and take those three and add them up, overall, the larger time frame bias, in my opinion, still neutral, bearish, more bearish, right? Which means like shorts are definitely on the table. And if you are going to go long, it has to be really, really good reasons, good trade location. It has to have more criteria. I'm not saying there hasn't been long trades in the last week or so. It's just that I personally have just been on the short side. Like, there was an instinct to go long at this zone, whatever. But I just, for some reason, my larger time frame bias is making it easier for me to execute the system. Even though I know, right? We know we went from a down market, now we're might be in a sideways phase where, up here going short, down here towards the lower range of this sideways channel, we can go long. That's why, I mean, if I exited the runner there, I knew entries or exits are entries, but that I just need a little bit more of a criteria. And I think that you know, also just based on what I'm doing today, sidelining was probably the best move after I exited that runner because I don't want to be doing two things. There is like a little bit of energy before I started this call a little bit late. I'm like, well, I have a rule where I don't like to put on positions while I'm teaching because it just makes me I can't focus on what I'm doing. Part of me is like, wow, this is I make more money trading, and this is going to be like possibly a nice short setup. Although it's a short setup because not only it's the high of the day, it's a wide double top, most likely a sideways day. If we go to the daily, this is very, very low relative volume. 442, it's kind of done for the day. The market's closing in a couple hours. I don't really want to get involved yet anyway. But notice this is just horizontal and directional, so there's a confluence. But I would argue that my trade yesterday has higher edge. Even though I know this one has worked out, and I don't know if this one will work out. It looks like it will. But what they have in common, though, is that this is initial resistance with directional and horizontal. This is initial resistance on this day with directional and horizontal. But notice it's not just its time of day. This is more late in the day. It's like, it's not toward. I don't really like to get involved too late in the same day, although that kind of ends the trend and whatnot. Uh, at the same time, the day was still kind of in play, and this was around 10 late morning. So like there was this whole other idea of an afternoon session, and I'm always trying to think like who's in control of the day. So I have like time component edges around like the open of like 9:30 a.m. Eastern Standard Time when the physical exchange is open in New York and Chicago. Because the volume increase usually can kind of fit like who's in control of the day, and it's like a puzzle. So what I found out, especially in the S&P, that like, a high percentage of the time, the higher the low of the current day will be made in the first hour of the trading of the regular trading hour day, like from 9:30 to close. So you could do a daily call right before then if you're not like a night guy. I've been doing kind of like that plus checking in around the daily call time. But if I'm tired, I'm going to sleep. I'm not going to try to do like this whole, you do miss out on certain moves. If you're planning ahead of time, you'll be like, okay, I'm fading that zone anyway, but another reason why is like this time is more optimal, 10:45 a.m. The day's still in play. This has kind of played itself out. So And the other reason too is that, as we came up here, besides this being the intraday high and this being the double top of the intraday high, this um is a high volume node of the balance. So these two lines represent a high volume node in past time, which is stronger than where we are here. Trade location wise, we're towards the end, right? We're towards the end, we're towards the bottom of this balance where the last time we got here, we actually had a strong enough move where, a couple times we bounced and then we ultimately, once we hit the back of the zone, had a move that was a trend up day for a couple of days and took us to the highs up here. Right. So as we came back up here, this testing it off the rotation of the zone has a lower edge for shorts because of that reason. While up here, we didn't test this, and the high volume node was a stronger point of resistance than initial support on that day, based on the fact that if I show you this, if we draw just some data points from here, this was a high volume node. So like I drew that, has high edge stop behind this, or maybe even behind this little one here. If I'm willing to risk this much on a trade, I better be able to have at least like, 1.5 to 2 R on that. And I did get something like that, right? Not holding all the way through that, but half off around here, first zone, and then 25, 25. A good trade, right? Planned it out, felt comfortable. Look how quick this finance for like as soon as this get this selling tail and this starts to go down quick. This is a 15-minute chart, so this is relatively quick for trading. Sometimes they take hours, days, you know what I mean? And this one, on the short side, sometimes they work out really quick. Notice that when we came down here, it like takes a while because this zone is weak. The longs are not in control today. Whereas when we came down here and I exited the runner, I knew I was comfortable to exit the runner because I said, hey man, if I'm willing to go long here, which my system probably said to do, I just wasn't in that crazy execution mindset to do that. Like I'm a human being and stuff. And I had other obligations today to put on this type of energy, but this is the idea, like taking off that runner and entries or exits, we had a stronger move off of it. Whereas on the day when it wasn't, we kind of bounced around and then broke through. So that keeping in mind, like, here the Bulls will take control and here the Bears can take control, right? That's how this trend down was predicted. And then if you start to notice the trend line and then you get the key reference areas on the horizontal and they go up into them at the same time, you have a really nice edge when you're planning this out on these smaller time frames. Now, we know all balances will eventually end in a trend. And like I said before, all trends will end in a balance, except some trends will have that V reversal, but that's less frequently. Like this trend ended here in a V reversal, but then it just started to balance, right? Everyone thought like, oh my God, here we're just going to be the V recovery. No, it didn't even break that day's high. Calm down. You know what I mean? We're going to go sideways for a while. What's great is that, we do know that trends often start from this red line VPOC. So the longer this balance matures, the greater the odds that we're going to get a break from it. And I predict based on the market context that the break is going to be down. Sorry, guys, it's going to be down based on the market context. I'm not saying it will be down. Market context suggests it'll be down. And the market context overlay with this system has been right every single time since January 16th when everyone had to get out of their portfolio and start going short. Some of the reasons why we can zoom out, you could see we have this 200 cross above the 50. It's 250 are kind of a classic ones. That's a death cross, right? And that shows, you know, that the Bears are, if you just look at the beauty of that. We can get more data on a different exchange, but if you notice here, for the entire of this bull run, the 200 moving average held as support. And then once we had the multiple leg counts out, which definitely increases the odds of a stronger time frame reversal, we had a huge breakthrough it. Then we popped back up into it when the moving average was reversing the death cross, and it hit let's see, pretty strong on that, like death cross here, and then hit right on the 50. Yeah, that usually signals that the bear's in, right? And that we're gonna shift. We went bull market, and then we had this really strong sideways phase, and no one wants to see it that this trend down. When you saw this top, triple top, and the RSI flipped bearish weeks, if not a month before this, and then you count up from the bottom 8 or 9 leg counts, and then you have the triple top, and you have the RSI flip bearish, And if you don't sell on strength, which you should if you just draw this trend line because of hook from extremes, and but you see then the next day this bearish engulfing candlestick pattern, which takes out all this data, just get the fuck out the next day on the pop up. I mean, ridiculous not to um understand what's going on here in hindsight. But like, seeing this come up here again, I'm just not gonna let that happen again. Right. And then, if we go on the 2 day here, right, there's an inverse zero line reject right here, right? When this was coming back up onto bounce. I didn't even necessarily even need to see that because I'm using the daily, but it's very, very strong inverse zero line reject, which is a bearish setup on the 2 day, which hasn't, officially even ended yet. It's still playing out. Now let's just for the sake of it, let's go to a three. Well, let's go to a little bit of a chart that has a little bit more data. And the other thing too is I drew a zone at this key swing low, which as you can see, it kind of touches the top of this balance. Which if we go back in time, you know, not quite, but roughly like, there is this area of support. I can't have a zone this big. This was more of the support, but the fact is that this was a key area of support. Now we broke it, right? That's another indication, right? But if we just look back in time at this idea of these moving averages changing roles, right? Here, 2022, flipped roles, purple over blue, death cross, bear market. And then, has to bottom out, right? We're kind of like in this phase. Everyone thinks it's just going to go up. Everyone thinks it's just going to go up. But look what happened. Like, I think we're here. We're going to have another leg down, and then we're going to have a long sideways phase. And then, could be a little quicker this time. There's institutions involved. Maybe they won't let it go as much as down, but it doesn't really take account for the ETF outflows. And the other thing too is we don't really need to speculate like this because, like, you know, behavior repeats itself. It's eerily how similar 2022 looks with the double top here, and then just having these patterns break down, right? But right, so then here we are, right? I just think we haven't really had that sideways phase yet, like we had here. It doesn't have to look exactly like that, but let's just keep going back in time. We saw 2022 play out. Let's see how this is 2018. Right, Bitcoin kind of makes its top, right? Purple then crosses over blue. If you didn't get out anywhere in here, here's that death cross. Pops back into it. Everyone thinks it's going to recover. And then now we get a real bear, right? I mean, the death cross is like almost like the late confirmation if you don't have the capacity to have the skill set to sell on strength, which is like, like I said, hitting that triple top, seeing divergences, counting your leg count, knowing that the biggest candlestick at the end of a trend usually signals exhaustion, but like selling on strength with a giant green candle at the end of an uptrend never feels great. So you could always wait for that confirmation of it, but at the same time, like you don't want to be left in a situation where you're just like constantly hoping that it's going to go up here, right? Look, you might have been hopeful, and then you're sitting through this, and you had to wait this long, right? So that's the idea of this death cross. And a lot of people might think like, oh, well, here's a great time to reload. Well, if you don't mind it, if it does work out having your capital tied up for well over a year here before you break even, I mean, you could be doing other things with it. Well, if you understand time cycles, you might just not be a DCA guy understanding a level. We might be in a huge sideways phase now. There's a time cycle chart that I can help you with that might give a more of a forecast that's been pretty accurate. But I mean, so here we are in 2018, 2022 worked out. We can go back further, but you get the idea that this pattern has repeated itself, and whether it'll work out or not now, no one knows. But the idea is that from a positive expectancy exit perspective, why would I sit through that risk? Like, is the reward really worth sitting through this? If you have a portfolio that you didn't want to de-risk up here, for how much more were you willing to sit through this to get to a little bit? I mean, it just didn't make sense. So just from a top down, we'll just keep getting confirmations until we get to the monthly, or maybe we get some incongruencies. But okay, here's that time cycle chart, which sort of predicts that around May 11th, there'll be the inflection point. So we might be going sideways to down to then. It definitely predicted this last shoulder out of the sideways into the down market before it happened. It definitely predicted this double bottom here for the next leg up. We were going sideways in time. If you reloaded in here, your capital's tied up, tied up, tied up. But if you waited for the time cycle, you hit the trend. You see how it helps you time it better? Capital tied up is capital tied up, right? Now, one thing I have to do is I have to maybe move this down a little bit more. These time cycles now are kind of above the thing I need to look at, but you get the idea of what this thing can do. Look at this. Sideways, sideways, low, right? Got the low at least, but then you were with it. The trend starts not bad. You know what I mean? So, I mean, you can't deny there's something going on here, right in the middle of this trend here where we haven't even had anything like this. You know what I mean? It's just, it's a little risky. We still have the RSI bearish red over blue. That usually comes by late anyway. We can also take a look at this with a little bit more data and we can look at another way of looking at this. I have here, here's another death cross with different time frame moving averages to get a little confluence to see. And you just it's the idea of how you just go back and you just visually look at like how does this place and how does this fit? This is the happens to be the 50 and the 21. So I mean, just look how this fits. Let's just take a look. Right? Same idea we were looking at with the 50 and the 200 on the 2 week one, or I'm sorry, the 2 day and 3 days. That trends intact. The 50 held for the entire bull run every time it was tested, except this time the breakdown breaks it with conviction, pops back up into it. Broken support is now acting as resistance into this death cross, and we get the leg down. Very bearish, strong move down into it, into some major time frame resistance, but without that time frame cycle, we have to probably get one more. Look at this, one leg up into it, down leg into it with a buying tail, pops back up and then down and then sideways, pops back up and then down and then sideways. Right? That's usually what happens. At least that's what happens in this 2022 death cross, which just happened. It fakes people out, right? But after this context, right? And we can go back and we can look at it also happening in 2018, right? We have an anomalous event here with COVID, but I'll show you on the Gaussian channel how the Gaussian channel, every time that I have this in orange circle where the death cross pattern did predict the bear market that worked out, the Gaussian channel already started to turn red. When the anomaly happened with COVID, which, this is COVID 2020, the Gaussian channel, which I'll show you in a minute, was actually still green for a buy. So it did not give the same contextual reading of it, right? So looking at these things like this kind of, can give you a clearer picture. Still bearish on this time frame. Let's look at that Gaussian channel now, real quick. I'll look at different time frames. We'll look at the 5 day one here. So we're just going to go back at that 2022, 2018 inflection point, and right up in 2022, this started to turn red, right? When, corresponding to the same time we sold on January 16th, right? Bear market stretched out and in a red. We've been in a giant, huge green phase. Now we need some red. Huge green phase, right? Right when we went up here when we sold, what happened? It started to turn red. Then I cloned this from here to here. This could get, got to that level, but it doesn't have the time factor involved. This needs to play its redness out, right? Going back in time. Yeah, this is what I was pointing out about COVID. Notice the anomaly of COVID, it was still green when it broke through. Whereas, the times when the death cross did work out or whatever on the other idea of it, it was red down, red down. This time it was still green for a while, right? Kind of giving you heads up. And then this time it was obviously red, confirming that once you break the meridian line, aka the death cross in the other context, right? It's confirming a bear market. And we could, look at this at higher time frames, 7 day one. Why not? Let's see. Just to see how that looked, right? Five-day one seems to get a little bit more of a stronger picture. But yeah, see this one popping up, then it turns red on this time frame popping up. Maybe this will turn. 5-day one looks pretty good, so we'll stick with that one. But yeah, so I'll X this out before I save it on that time frame. Just finding the right moving average. You can start with like the 50 to 200. You could do the 50, 21. You could do 200 to 40 and 20. I'd use those three in conjunction on the daily for a while. I don't always use the same ones on the same time frame. But yeah, you can see like we've been in this channel. So, we got to be careful. Only picking the best trades, right? Doing the daily call, maybe not trading. Not trading is trading often in this environment. It has not been easy to trade this environment if you're not thinking in terms of a sideways to down volatile environment. It might have gotten you a couple times, but not trading is trading. Be patient, do your calls ahead of time, and it'll work out most of the time. That's what you're after. You're about when you're following your system and you do your plan and then you see a setup and you say, okay, is this a positive expectancy idea? If you could just put it on your system, then it's going to be easier for you to pull the trigger. You should see, I have these things visually out in front of me, so as a mind map as well, so I am not going to have my reptilian brain override my system because I need my system ahead of time, but I need to see it actually as a snapshot. So I have mind maps on whiteboards in front of me of my system so I can do a scale in real time so I don't get swayed by something. So yeah, that's my 2 cents. I'll see you guys in the room. Today's what, Thursday? We got tomorrow. You guys know I also work over the weekend. So if there's something relevant to post, I'll post it then. Over and out.